Hello everyone and welcome to my channel SN Study Station. So here today we are going to see there are few terms in sources of finance. That topic we were learning means how we can collect money from different sources. So we have seen how we can collect money from shares, either it is equity shares or preference shares, or how we can collect money through loans, debentures. That all we have seen. Okay, so other than this also there are various options. Options will be available with the help of which one person can collect money, one person can arrange money for his business. Okay, so let's see what are these terms. Term loans. You have seen debentures. So debenture is also a type of debt. Now term loans. Loan, you all know. I think you all know about loan. Okay, maybe you have not taken loan, but you all know about it. So term loan means the loan which has a term, which has a time period. Okay, the loan which has been taken for some duration. It is for 1 year, 2 years, 5 years, 10 years, like this it has been taken. So it has a fixed time period. What does this time shows? That when that time will be completed, suppose a loan has been taken for 3 years, so after 3 years the person has to return the money along with interest. If he is not doing so, then his property or whatever securities he has kept, so that can be sold, and from there the loan amount can be taken. Okay, so these are the term loans. It is basically used. Term loan means it is for a huge time period, for a long time period, so big expenses are also involved in it. We want to buy a building, we want to buy a land, we want to buy a big machinery, like this. For these purposes, term loans can be taken. So it is also a source of finance. Deferred credit. Deferred means something which is stopped somewhere, something which is deferred. Deferred credit means credit which is deferred. That means you are buying today and paying later. So you bought something today and you don't have money to pay for it. So you have this facility that you can pay the amount, pay the price of that product later. Okay, so it is like a credit also. And here you can pay in installments. It is like installment credit. Okay, that means today you don't have money, but you are sure that after 1 month you will arrange money and you will give it to the person. Or suppose you are doing some job, so you are like, on this date my salary will come, then I will give you money. So like this you can do, or you can pay it in installments. Okay, every month you can pay some amount instead of paying the whole amount together, so it will be easy. So this is also a source of finance. Means you don't have money, but still you can buy something with the help of deferred credit. Lease financing. Lease financing, what is that? It means here also you are getting to use something, but you don't become the owner of that thing. Okay, suppose you want a place, you want a land. Okay, you want to purchase a land. A person who doesn't want to sell his land, but he wants some money from that land, so he can give it on rent. On rent also that person can give it to someone, so the other person can use it as they want to use. So this is lease financing, where one person gives his property, gives his asset to someone else for using it, and the other person will pay the rent for using it. Okay, like any car or machine. Okay, cars are also there. You don't have car, but and you can't afford it. Okay, or anything can be there. You want a place, but you can't buy any place. You want a place to live in for some time, or you want a place for doing something there for some time. So you can go for lease financing. Means where you don't become the owner, only you have to pay the rent for using that particular asset. That is lease financing. Hybrid financing. Hybrid means it is a mix of something. Means it is a mix of loan, it is a mix of debt and equity. Okay, how can you get debt and equity both together? So it is a type of financing where it is a loan also. If loan is there, that means you have to return it sometime. And equity also, that means you are going to get ownership. So both benefits will be there. So like it is like convertible bonds, means the moment when you are going to purchase it, so that means the person who is going to sell this, he will get money. That means he has given loan to the other person. So it starts as a loan, but later it can be changed into shares. Okay, so the moment it will be converted into shares, the person will become the owner, because the person possessing shares in any company become the owner of the percentage that shares he possess. Okay, if you have 5% shares in the company, you are 5% owner of that company. So shares give ownership. So it starts with bonds, like loan. It starts like a loan, means you have taken money by selling the bond. That means now you have money, but you have to return it because it is a type of loan. But later you can convert it into shares. So the other person will get the shares, will get the ownership in the company. So this is hybrid financing. Now, venture capital. Venture capital means where there is a risk. So venture capital is the money given to new or growing businesses. There are some investors who invest in the new businesses. If any new businesses is about to happen, or if any business is there that is well established also, or that is growing properly, growing well, so in that investors can invest their money, because they think that the company will become successful and they will get money. So they will get ownership in the company. Investing means maybe they can purchase shares in the company, like this also they can do, but they will purchase major stakes in the company. Okay, because they will become the owner of the company for that part. Angel investing. What is that term? Angel investing is angel is itself looks like a rich term. So angel is a rich individual, means a person who gives money to startups. Startups, you all know. Okay, whenever any person wants to do something, wants to start something on his own, he doesn't have money, he doesn't have any resources, he's very new, so it is a very early stage of the business. So to these startups, if any person is giving money, so that person will be angel investor, and this type of process, this type of investment is known as angel investing. So these persons not just only invest their money, but they can guide the entrepreneurs also. They can give suggestions to the entrepreneurs how to start the business, how to means they can guide them in every stage, in every step of their business. Okay, because as they are new, they don't know anything, so they can guide. So these are angel. This is angel investing. Private equity means money invested in companies to help them grow, improve, to turn around. Okay, so private equity means with the help of this, we are investing money in any company which is not listed in the stock market. So suppose if a company is listed in the stock market, then it can issue shares, it can issue debentures. So that can be done, and through shares it can collect money, it can arrange money. So that can be done. But the companies which are not there in the stock market, okay, which have not issued shares yet, which are not listed in the stock market, so to these companies, if any investment is given, so that investment will be known as private equity, to help them, to help these companies to grow, improve, and turn around. Okay, so the investors usually buy a big part of the company and later sell it for a profit. So it is for those companies which are not listed in the stock market. Crowdfunding, last term. So crowdfunding means funding from crowd, arranging money from a large number of people. Crowd means there is a large number of people, so arranging money from a large number of people. Okay, usually online. Okay, like through shares also you can arrange money from a large number of people. Okay, if you issue let's say if you issue 1 lakh shares, okay, even though one share is of 10 rupees only, so that means by issuing 1 lakh shares, one share is of 10 rupees, so you can arrange 10 lakh rupees. Okay, means 1 lakh shares you have issued at the rate 10 each. One share is of 10 rupee. So any individual can buy it if he is doing his stock trading. So he can anyway invest 10 rupees. 10 rupees is not a big amount. So person can purchase 1 share also, 2 shares also, or any number of shares that he wants to, that he wish to purchase. So total 1 lakh shares. With this 10 rupees, small amounts, 10 lakhs can be arranged. So crowdfunding, usually it is done online, means you have shared your idea, you have shared your business details to the public, and if they are invested, they will invest money in your business, like this. Like in YouTube also people do like this. Some people put the there is a what is that called, there's an option where you can send money, even 10 rupees, 20, 30 rupees you can send to the people. So that can also be a crowdfunding, means from a large number of people we are taking small amounts, and that small amounts will become big because there's a large crowd involved. So they will invest if they like your idea, product, or they want to support for any reason. Okay, it can be of any reason. So these are the terms, means these are few more things through which companies or businesses can arrange money, or individuals can arrange money. So I think now you are clear about sources of finance, and if you want to open a business also, if you have even a small amount also, then you can go for it because you know the measures. But first check it properly, everything. Okay, don't go ahead with incomplete knowledge. First take complete knowledge, then go ahead, open your startup. Okay, so we in the next session we'll start new topic. So till then, stay connected and watch the videos, and wherever you have any doubts, just put the comment. Thank you.